All I've been hearing about all of 2020, all of 2021 has been electric vehicles and Spacs. Everyone says this electric vehicle company is going to be the next Tesla. This Spac is going to 10x. And none of these companies really have any backing. They have no orders. They really just have ideas. Some of them already have products, but they're really very early on in development, and they have extremely high valuations. When you combine the two electric vehicles and Spacs, well, then that's when you reach extremely high valuations. But today we have a company that I want to first go over among many other topics that we're going to cover in this video, but it's a company called Arch Aviation, and they landed a $1 billion purchase order from United Airlines, and they just announced that they will be merging and going public via a Spac called ACIC. So this company, Arch Aviation, isn't just an idea. They actually have a large purchase order of $1 billion from United Airlines, which is one of the major airlines in the United States. While they haven't yet manufactured their vehicles yet, it is a really good sign that they have such a large purchase order, $1 billion from United Airlines. It's not just a small company. Obviously, United Airlines, it believes in them, thinks they can develop what they're saying they can develop. So exactly what Archer Aviation is they're an electric aircraft startup targeting the urban air mobility market. They're very similar to the another SPAC that we've spoken about on my channel called EXPC is the stock ticker symbol, and the company is called Blade. It's also similar to a stock called eHang, which is up over 1,000% in the last 3 months. It was at about $12 a share. Now it's over $105 a share. And this company, Archer Aviation, is tackling that same exact market. So what they're working on is electric vertical takeoff and landing aircrafts. So this is what Elon Musk has talked a lot about in the past. He says this is going to be the future. And right now, the vehicles they have currently designed are for short distances. They're not going to replace, let's say, United Airlines regular aircrafts that take you from Florida to New York or New York to Texas. It's not going to replace those, but these vehicles are designed to travel up to 60 miles on a single charge at speeds of 150 miles per hour. And they plan to unveil a full-scale model, one that has longer range and more developed later this year, and is aiming to begin volume manufacturing, help fulfill this order for United Airlines, and help really scale up production in 2023. And according to the CEO of United Airlines, he said, by working with Archer, United is showing the aviation industry that now is the time to embrace cleaner, more efficient modes of transportation. He said, with the right technology, we can curb the impact aircrafts have on the planet, but we have to identify the next generation of companies who will make this a reality early and find ways to help them get off the ground. So obviously, United Airlines really believes in this company. And they explain how Archer's electric vertical and takeoff aircraft could reduce CO2 emissions by up to 50% per passenger on a trip between Hollywood and Los Angeles International Airport. So basically what this company pictures is that in the future, the urban air mobility market is going to be a massive market. Morgan Stanley thinks this could be an $80 billion market in the future. And essentially what they're trying to tackle is short distances that typically maybe someone might take an Uber for. Now they might take an electric vertical takeoff and landing aircraft. So I have to wait and see how that plays off. But this is a very big deal because they have $1 billion purchase order from United Airlines. And United also has the option to buy an additional $500 million of aircrafts if they like how it goes and if they're able to deliver a quality aircraft, if Archer is going to be able to do that. In addition to this, they think that the electric vertical and takeoff and landing vehicles will be a $1.5 trillion industry over the next 20 to 30 years. So long term, they see this being a massive industry, and you could be getting on the ground floor with this stock. We'll have to wait and see how this plays off. It still is very early on. Again, like many SPACs, it's very early on. But the one thing that really separates this company from the others in the industry, from eHang, from Blade, is that this company has a major purchase order from one of the largest airline companies in the US, which is United Airlines. All these others don't have that sort of deal, and that's actually one of the reasons why I invested in them personally and why I really like them. And finally, the last thing is Kathy Wood and ARK Invest have been consistently investing in EXPC, which is merging with Blade. And I think this company, since they just announced it, I think that this is going to be a target that we're going to see them putting more money into as well. They haven't announced ARK Invest that they're putting money or buying this stock yet, but I think they will. And once people see that they're buying it, I think it's going to go up even more. So it'll be interesting to see how that plays out. Big news as well is that the Chinese EV maker, sticking on the theme of electric vehicles, the Chinese EV maker NIO might be coming to America and the United States a lot sooner than people think. So NIO is one of the largest EV manufacturers in China. They're pretty far behind Tesla, but they are able to produce many more vehicles than XPeng and Li Auto. The big three electric vehicle companies in China that are based in China are NIO, XPeng, and Li Auto. XPeng is focused more on autonomous vehicles. That's a big portion of their business. NIO, on the other hand, they are looking to expand globally. Right now, they have capacity to produce about 100,000 vehicles a year, and we had a rumor the other day, according to a job posting, that NIO is looking for someone to help formulate an action plan to enter the U.S. market. This was according to a Deutsche Bank analyst, Edison Yu, who was tracking NIO, and he found this job posting that was taken down pretty shortly after it was posted, but they did already post job openings in the U.S. to help enter the U.S. market. And according to the exact job posting from Edison Yu at Deutsche Bank, and according to this LinkedIn job posting, it says that the job responsibility is to work with American companies and teams to develop American business strategies, combine the NIO model and in-depth market insights to promote the innovation and implementation of business models, formulate an action plan to enter the U.S. market, and pull through the cluster resources in the headquarters based on key deliverables, and a lot of other things. So that's a pretty good sign. Right now, the problem is we're probably not going to see NIO enter the U.S. market that soon because they're first trying to conquer the Chinese market, and they have plans of entering Europe as well later in 2021. But they're only able to produce 100,000 vehicles, and right now they're able to sell as many vehicles as they can make in the Chinese market. So while they do want to get exposure in the U.S., they want to expand globally, they need to be able to produce more vehicles, and right now, all the vehicles they can possibly produce can be sold all in China. They need to be able to produce significantly more before they really are going to be able to meet the demand in China and worry about expanding globally. But obviously, this is a plan for them, and this could be really good for the company long term. With such a high market cap, they're going to need to deliver hundreds of thousands, millions of vehicles a year. The one thing is while this is good news moving in the U.S., it's just that they need to be able to make more vehicles because making 100,000 vehicles a year is great, but Chinese market, they have a much higher demand than that, and they're going to buy up all those vehicles. So there's no point of them really worrying about expanding overseas until they really can conquer the Chinese market. But we'll wait and see what happens there. Good news either way, in my opinion. Next up, sticking on EV. Today we're just covering a lot of EV topics, but some big EV news is with EVbox. And EVbox is an electric charging station company. They currently have over 200,000 charging points installed all across Europe. They're in 70 plus countries. They have 5,000 plus fast charging stations globally, and they are currently the largest EV charging station company in Europe, which is a really rapidly growing space for electric vehicles. Currently, Norway has the highest EV penetration out of all countries in the entire world. Europe is following closely behind them, and they are trying to replicate what we're seeing in Norway. But either way, we have big news with EVbox because they currently just received 3 ISO certifications to mark compliance with industry-leading standards. And what that actually means is that The ISO is the International Organization for Standardization, and it's an independent, non-governmental international organization that develops standards to ensure quality, safety, and efficiency of products, services, and systems. So essentially, these standards are really important for EVbox in ensuring consistency with their products in a global marketplace as they're trying to continue to be a dominant player in Europe, which they already are, and expand globally. This certification process took 12 months, and it demonstrates that EVbox has the ability to consistently provide products that meet the highest level, products and services that meet the highest level of requirements. And this is a really good sign for the company right now. Some of their major competitors are Switchback Energy, and another one is EVgo. EVgo is focused solely on fast charging stations, but they're based in the US, and they only have about 800 locations total for fast charging stations. They have a similar valuation to EVbox, but EVbox is much further ahead. EVbox has 5,000 plus fast charging stations and 200,000 plus charging points across Europe. So they are really a dominant player. They have a clear market share leader in Europe. And I think this is just going to continue to help with these certifications that they just got. It's going to show customers that they're definitely a reliable company and they are not going anywhere, but going to continue to grow. And I think with the electric vehicle industry growing rapidly in Europe, it's going to continue to help EVbox be the clear leader in the European market, and hopefully they'll expand more overseas. For those of you who don't know about it, the stock ticker symbol for this company is TPGY, I believe. Yes, TPGY. So let me know your thoughts on EVbox versus EVgo. I think EVbox is much more established, but let me know your thoughts. Okay, so we're going to get a little bit off of this electric vehicle run we had. We had talked like 4 topics there about electric vehicles. We're still going to talk about another electric vehicle, but it's a little different because this one we're talking about Audi, which just revealed its Porsche-powered e-tron GT. Audi's not an electric vehicle startup at all like the other ones we've spoken about. They are an established company, obviously. Everyone knows Audi and Porsche, and they are now transitioning more into the electric vehicle space. So Audi has announced the e-tron GT, which is an expensive, new high-performance electric sedan, is going to be built on technology developed by Porsche's first EV, which was the Taycan. And currently, the Audi, they revealed this model, and essentially what is going on is that it's going to get right now about 350 kilowatts of power, or roughly 470 horsepower. The sports version of it is going to get 440 kilowatts of power, or about 590 horsepower. And if with overboost and launch control, you'll see about another 100 horsepower added onto that. Starting price for the e-tron GT will be at $99,000, about $100,000, and you'll be able to start seeing these produced very soon. Another thing to keep in mind with this is that the Audi e-tron GT is going to have the same base as the Porsche, the Porsche Taycan. When Audi first announced this vehicle, they were using the same powertrain developed for Porsche's first EV, and it's similar to when you look at like a company like Volkswagen, and when they use similar powertrains for their vehicles. So Audi and Porsche are doing the same exact thing. Good news here is that we know this powertrain has already been used on other vehicles. It's not like it's brand new, and which means it has been tested a lot more. We'll have to wait and see what happens. I think it's a very nice looking car, Porsche e-tron GT, but let me know your thoughts on this. Starting price is around $100,000, and it has around 500 to 600 horsepower, depending on which vehicle you get. Next up is Salesforce. So Salesforce just declared that the 9 to 5 workday is dead, and that they will let some employees work remotely from now on. Some of their employees will never have to come back to the office. And what they're doing is, in a blog post published just the other day in early February 2021, they said the company's 9 to 5 workday is dead, and they'll allow employees to choose one of 3 categories that dictate how often, if ever, they return to the office once it is safe to do so. Salesforce is joining other tech companies like Facebook and Microsoft, who have also announced permanent work from home policies in response to the pandemic. And according to Salesforce Chief People Officer, he said, as we enter a new year, we must continue to go forward with agility, creativity, and a beginner's mind. And he said, an immersive workspace is no longer limited to a desk in our towers with ping pong tables and snacks. That's not what immersive workspace is necessarily anymore. He says they have to focus on being flexible with their employees, offering a number of different solutions to working rather than just being in the office. And the 3 different options that they're giving people is to either be completely in person, which is you're going to spend most of your time in the office. They said fully remote, which is self-explanatory. You don't come into the office at all. And flex. And flex would mean coming into the office 1 to 3 days per week, and typically only for team collaboration, customer meetings, and presentations. So those are the 3 options they are doing. And I think we're going to see a lot of companies continue to do this, where they offer those 3 options: flex, fully remote, and office-based, because the world is changing with everything with the pandemic, and a lot of companies have gone over a year now without having employees in the office at all. It's going to reduce a lot of costs for these companies if they don't have to bring their employees into the office. And I think a lot of employees actually like being able to work from home more now, rather than have to wake up early and, get fully dressed in business attire to go to work, when they could just work on their couch from home or at a desk from their home. So we'll have to wait and see what happens, but I think more and more companies are going to be doing this in the next couple of months and years. I think we'll see more announcements like this. Moving on is with Elon Musk. Elon Musk the other day announced how Tesla bought $1.5 billion in Bitcoin. And Elon Musk is a clear supporter of clean energy and clean power. But by Tesla buying Bitcoin, they're actually not helping that whole initiative that Elon Musk and Tesla have been pushing for years. They're all about, clean energy, reducing carbon emissions. But the electric car makers' backing of Bitcoin could turbocharge global use of a currency that's estimated to cause more pollution than a small country every year. Bitcoin right now consumes more electricity than Argentina in a year, and it also consumes more energy than the Netherlands. So why is this? Well, Bitcoin mining is very expensive. And at current rates, Bitcoin mining devours a lot of energy because you need to have high-tech computers that can solve complicated algorithms in order to mine Bitcoin. And the problem is that even though, Bitcoin doesn't require paper or plastic or even metal to produce, it's these high-powered computers that have to compete against one another in order to mine Bitcoin and solve these algorithms, and that requires a lot of energy and often relies on fossil fuels, particularly coal, in order to generate the energy for these computers to solve these algorithms. So this is going to be pretty important because Bitcoin production is estimated to generate between 22 and 22.9 million metric tons of carbon dioxide emission a year. And with Tesla buying Bitcoin and saying they're going to start accepting Bitcoin, this could be a snowball effect for many organizations to do the same thing, causing Bitcoin to be more expensive. Bitcoin mining will then be more expensive, and that will mean that they have to have more high-powered computers, and more people are going to be competing to mine Bitcoin, and that'll lead to more carbon emissions. So essentially, Tesla's decision could lead to a lot more carbon emissions. And some people, some analysts, some people who have investment funds that are focused on sustainable energy, they're focused on the fact that Tesla may not be reporting this and may not be considering this when they talk about the company's zero emission ethos. They might, they're not really going to take that into account. They might just consider Bitcoin as an asset, but not really realize the underlying effects of buying Bitcoin and Bitcoin mining for carbon emissions. So we'll have to wait and see what happens there, but all we know is that Bitcoin takes a lot of energy to mine, and by Tesla buying Bitcoin, it's going to make it more expensive to do so. So we'll have to wait and see what happens there. Everyone knows what happened just a couple weeks ago with GameStop and AMC, Naked Brands, BlackBerry, all those other companies. We saw a massive short squeeze, and now a lot of people are wondering what company is going to be the next, what company or industry is going to see a short squeeze. At first, people thought it was silver. Now we're actually seeing it starting to develop in the cannabis stocks. So these stocks soared as Reddit and Wall Street Bets started to get behind companies like Tilray and Aphria and Aurora Cannabis and Kronos Group. So all these stocks right here. Just the other day alone, Tilray was up nearly 40%, Aphria was up 15%, Aurora was up 13%. All these companies are seeing massive, massive runs, and not because the companies have a lot of revenue or that, because right now Tilray has revenue of about, in last quarter they had a revenue of about $47.19 million, and their market cap is $7 billion. Aphria, their market cap right now is $9.5 billion, and they had revenues of $160 million. So they have really high valuations, and these aren't based off of their revenues. It's based in one fact because of Democrats having control of Congress and a lot of people thinking that there's going to be more legalization over the next couple of years, which is true. There is going to be more legalization. But right now, why we're seeing this massive run-up recently is because these companies have a very high short ratio. Tilray has short interest equal to 22.5%. Aphria has about the same thing, and a lot of these stocks have very high short interest right now. So that's what everyone on Wall Street Bets has been looking for lately, companies with very high short interest. And this industry is just an industry that I think a lot of people are looking to see massive growth in over the next couple of years. And I think we very well could see these stocks have big run-ups, not as much as GameStop, but it's possible for them to see massive run-ups in the next couple of weeks, especially with the large short positions they have, and if it gains more traction with the Reddit crowd and everyone on Wall Street Bets. We'll have to wait and see. A lot of these companies are good long-term with more legalization, but you have to remember with this industry that it is still risky because there are a lot of small players, and we don't know which ones are going to come out on top. So your best bet is to invest, if you're looking at it long-term, to invest in the larger cap companies in this space, the ones that generate the most amount of revenue, because those will be the ones that will probably dominate in years to come. Back on the topic of Tesla and Bitcoin, though. So after Tesla announced that they had already invested $1.5 billion in Bitcoin, GM followed, and they said that they have no interest in doing what Tesla did. And we thought that Tesla saying they would accept Bitcoin and Tesla saying they bought Bitcoin would lead a lot of other companies to do the same thing. But the problem is with GM is that GM and other car companies, it's not as easy for them to just say they'll accept Bitcoin, because GM does not sell its vehicles directly to its consumers. Tesla, you just go online and buy a Tesla. GM, you have to go to a dealership, like a franchise dealership network. And if GM were to accept Bitcoin or cryptocurrencies for new vehicles, it would have to work out the process of, dealing with dealerships, and that they wouldn't be able to just say, okay, we're accepting Bitcoin, and you could just go on our website and buy a car. Because with GM and other car companies, you can't just go online and buy a car. You have to go to a dealership. So Tesla was a great fit for doing this, but we may not see it be integrated in other businesses as quickly as you think, especially with the car industry because of this barrier that they have right now. One person who does accept Bitcoin is billionaire businessman Tillman Fertitta. He told CNBC that his luxury car dealership has been accepting transactions using Bitcoin, and he's been doing that for nearly 3 years, but they've only sold 17 cars, 17 total, using Bitcoin since they started this 3 years ago. So I don't think we're really going to see Bitcoin be a way that people buy and sell stuff, especially with the fluctuation in prices. I think people aren't going to want to be that person who bought pizza, which is now worth, like hundreds of millions of dollars in Bitcoin. I think we're just going to see people maybe use it as an investment, but I don't think we're going to see many people buy Tesla, buy other vehicles with it, at least in the short term. And finally, one of our last topics of the day is that the Twitter CFO says social media giant is considering whether to add Bitcoin to its balance sheet. So in an interview, the CFO of Twitter, Ned Siegel, said that they've done a lot of research, a lot of upfront thinking to consider how they might pay employees with Bitcoin, how they might pay a vendor with Bitcoin, how they might do all of that if someone asked to be paid in Bitcoin. They said they have a couple options. They could either have Bitcoin on their balance sheet or they could transfer it at the time of payment. So they said that's something they've been looking at, continuing to study, and they haven't made any changes yet, but they want to be thoughtful about it because it is gaining a lot of traction, and they want to make sure that they have the flexibility to pay in Bitcoin if people want to be. It's just like being paid in another currency. They want to have that flexibility. They said no changes have been made yet, but they are debating, which route are they going to go? Have Bitcoin on their balance sheet, or if someone wants to get paid in it, can they just transfer it at that time, at the time of payment, when they give it to that person? So Bitcoin and shares of Twitter are up a lot recently. They've been doing very well. They delivered much higher revenue than was expected, and we'll have to wait and see what happens, but the company did have much higher quarterly sales and profit than expected, and the stock has been doing extremely well recently. And lastly, our last topic is with Aldi. So Aldi plans to add 100 new stores in the U.S. and expand curbside pickup. This is a big deal because right now with the pandemic, a lot of people like to either order from Instacart or DoorDash, or they like to do online deliveries and not have to go into stores. Many companies like Walmart and Target and now Aldi's and Kroger's, a lot of these companies have curbside pickup, and Aldi says that they want to open up about 100 new stores in the U.S. this year, and they're also going to be expanding their curbside pickup service to 500 additional stores by the end of the year. The company said it's focusing on adding new locations in general in Arizona, California, Florida, and the Northeast. This is a German-based supermarket chain, and they have been continuing to grow in the U.S., and I think this curbside pickup will help this chain out a lot. Currently, Aldi's expansion of curbside pickup will make the service available in about 1,200 stores, and they're still planning to offer Instacart and online delivery, but that does get more expensive, and having curbside pickup doesn't add all of those extra fees on that people would have if they did order from Instacart. So I think this is a good move by Aldi's. A lot of people will, I think, really like this. It does make it a lot easier, but let me know your thoughts on that. And anyways, we covered a lot of stuff today. I hope you guys enjoyed today's video. And if you made it this far, well then comment down below. Let's comment down below today, headphones. If you made it this far in the video, comment either the word headphones or a headphone emoji, and that's it. We'll confuse everyone else, and I'll know that you guys made it this far, and I really appreciate it. So anyways, I hope you guys enjoyed today's episode. We covered a lot of stuff from that new electric vehicle Spac called, what was it called again? called Archer Aviation, all the way to Bitcoin, GM, and even Aldi. So I hope you guys enjoyed. Don't forget to get your 4 free stocks, each valued up to $1,600 when you download the Webull investing app using the link down below. I hope you enjoyed, and I'll see you guys in the next episode.